Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong structure level of demand and support for this market. In fact, from here, what we can notice is that all this previous rejection to the upside, which lasted quite a few months, started. And at the moment, the market is testing the exact same zone, has already started rejecting it to the upside. So there is a good probability from here to see yet another rejection to the upside and for the market to create a potential double bottom at this zone. So here on the monthly, everything seems quite bullish. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear as well. We had a massive move to the downside, then the market followed with this horizontal accumulation period, and at the moment the market is rejecting the level to the upside. So from a weekly standpoint as well, we're seeing a massive rejection to the upside after a horizontal ranging period, which could easily be an accumulation of longs from an institutional perspective, which is something that we will be looking at in just a few moments. And now the market seems to have already entered into the impulse phase to the upside, so the rejection to the upside away from this historical support. We can also notice if we look closer to the market structure here on the weekly time frame, we can notice how clearly we had bearish market structure with the creation of lower lows and lower highs. Then we had this horizontal range, and now is the first time that the market has created a new higher high, so higher than the previous one that we had here. So this is a clear breakout from a weekly standpoint. So let's keep this in mind and drop down on the daily time frame. Now here on the daily time frame, we can notice the range in an even clearer way. Clearly, we had the top of the range here and the bottom of the range here. The top of the range was acting as resistance and the bottom of the range was acting as support, bounding this market in between these two levels. At the moment, we're seeing the breakout to the upside away from this zone. So the level that now is important is the top of the range. And this top of the range is previous resistance from which all these previous rejections to the downside were created, which now the market is breaking it to the upside would be turned support. Now, in the case of an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have the 0.32 of the Fibonacci taken on the impulse leg, lining up exactly this zone, which is also the previous high. Now, this creates historical support and demand because we have and also confluence of support and demand because we have multiple layers of support lining up in the same area of price, which creates confluence of support. And when you see confluence of support, there is an increased probability of seeing institutional longing. So let's go and see what institutions have been doing so far by looking at the commitment of traders precisely on the CHF. Now, if we look at the data for the CHF, we're actually already looking at CHF USD because all the currencies on this spot are traded against the USD. So if we look at the data for the CHF, already we're looking at CHF USD. But if we want information on USD CHF, we simply have to reverse everything. So if we look at the net positions for CHF USD, we can notice how with the last reports, net positions have been decreased. We went from minus 17K to minus 22K net positions with 2,600 shorts added with the last report on the CHF and almost 1,000 longs getting closed. Now, this means that If institutions are shorting the CHF and closing their longs on the CHF, they are essentially making CHF weaker by shorting it. And in order to short the CHF, they are longing USDCHF. So institutions have been increasing their longs and decreasing their shorts on USDCHF, therefore making it stronger. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now, back to the analysis. So in a situation like this, if the market would correct to this confluence of support, instead of which there is an increased probability of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside away from this confluence of support. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.